Welcome to Ekaita Tutorials. We are part of Ekaita Consultancy, where we offer a number of services ranging from audit, tax, advisory, project planning and management. In my previous video, I introduced a very important topic, that is accounting principles. And in that video, I listed a number of principles that I wanted us to look at or to go through together. And today I want to introduce the first principle, that is accrual principle. But before we look at accrual principle, there is another important principle that goes hand in hand with accrual principle, and that is cash accounting concept. In cash accounting concept, it states that revenues and expenses can only be recognized when they are exchanged or when its equivalent is exchanged. The cash accounting, therefore, only allows you to transact when you have liquid cash. For instance, you cannot pay for your utilities if you don't have cash, and therefore that means your operations are going to be curtailed. Similarly, when you are selling goods and services, you cannot sell these goods and services on credit. Therefore, you can only exchange the goods and services with cash or instant cash payment. And therefore, this limits many businesses from operations whereby you can only transact when you have cash. Now, back to accrual principle. What does it mean? Accrual principle is an accounting concept that requires that companies record revenues and expenses when they are incurred rather than when cash is received or paid. And therefore, this gives an opening to businesses or to traders, whereby you can buy goods on credit, you can also pay services, you can also receive services and goods on credit. And therefore, this is a very important concept that personally I advocate for businesses to adopt. For example, if a company receives a utility bill in the month of December, this bill is supposed to be recorded in the books of accounts of that company in that particular month. So it doesn't matter when this bill will be paid. The bill may be paid in the following year, let's say in the month of January or February, but that transaction relates to the month of December of the previous year. So that's how accrual principle works. In the same way, if you supply goods and services to your customer in the month of December, but the customers don't pay for the same goods in that particular month, it doesn't matter. What matters is that transaction has to be recorded in the correct month and the correct date. The payment date does not matter. So that's how accrual principle work, and it's a very important concept that if as an accountant or as a business owner, you need to adopt and use on your daily basis. Therefore, this principle ensures that financial statements reflect the actual financial position and the performance of a business within a given period. And so, for you as a business owner or an accounting professional, this accrual principle is very important as it provides a more accurate picture of your company's financial health. It ensures compliance with generally accepted accounting principles and international financial reporting standards. It also helps investors and stakeholders in making sound and better financial decisions. Thank you so much for watching up to the end. One more thing, please subscribe, like, and share this video to your friends so that we can keep learning together. And whenever I share a new video, you will be the first one to receive the notifications. Thank you.